Okay, let's dive in. Imagine for a moment getting paid your wages. Well, in gold.
Actual gold, not paper, not numbers on a screen.
Exactly. That was apparently reality for some Egyptians, maybe 4,500 years ago. Or think about the ancient Greeks using gold coins for trade. Gold's been central for ages.
It's pretty amazing its staying power as a store of value, a medium of exchange for millennia.
Right. But then you hear modern viewpoints just dismissing it, like it's a relic, totally irrelevant now.
Yeah, and that tension, that's really at the heart of the book we're looking at today, isn't it? Gold Wars by Ferdinand Lips.
That's the one. We've got a stack of notes, excerpts. It lays out a really strong case, a specific perspective for sure.
A perspective on gold's history and what the author sees as these forces actively working against it right now.
So our mission here in this deep dive is to unpack those core ideas from Gold Wars. Why was gold historically seen as, this bedrock for economic stability?
And who, according to Lips, has been fighting that? And what are the consequences he sees?
Exactly. We're guiding you through this particular view on money, history, and where we are today.
It's definitely a perspective that challenges some, well, conventional thinking about money. It highlights this conflict, this long-running battle over what money even is.
Okay, so to grasp the war, we need to start at the beginning. Gold's ancient roots. The Egyptians mining it 4,500 years ago.
Using it for wages, even. And the pharaohs hoarding incredible treasures, they were really pioneers in using gold on a large scale.
But the big leap towards gold as, structured money, that seems to come with the Greeks. Lydia's King Croesus, around 560 BC, credited with the first pure gold coins.
Right. And then Alexander the Great, he was crucial. He spreads the gold stater, his standard coin, during his conquests, all the way to India.
So he's essentially setting up a kind of early gold standard across a huge empire.
You can argue that, yeah. Then after what the book calls the Dark Ages, where things kind of regressed economically.
Gold makes a comeback in the Renaissance. This is where it gets really interesting for the argument. Florence, Venice, minting the florin, the ducat.
And Lips argues Florence was basically on a gold standard from 1252. They weren't just using gold, they were rebuilding a whole monetary system around it.
So the perspective in Gold Wars is pretty clear. For centuries, stable governments, stable currencies, they were grounded in gold.
Wealth was measured in it.
Mm.
Gold discoveries drove development. Think US, South Africa, Australia.
The core idea being that gold provides this anchor, confidence, roots the economy in something, real.
Something tangible. And the author argues it's uniquely suited for that, especially when things get uncertain.
Which brings us to the classical gold standard, the 19th century version. Lips presents it not as some top-down decree, but as something that evolved.
Yeah, evolved naturally, he says. Over centuries, learning from past mistakes, like currency debasements when governments tried other things.
And he points to Britain, the U.S., long periods in the 19th century, effectively on gold.
Yeah.
And relatively prosperous times, too.
Which challenges that modern idea that gold money automatically means deflation or economic stagnation.
Right. The book cites periods of rapid growth under the gold standard, where prices were actually flat or even falling slightly.
Yeah.
So growth and stable prices weren't mutually exclusive.
Stability is a key argument here. The 19th century gold standard is presented as this major achievement. Monetary unity, almost, without needing an empire to enforce it.
And this currency stability, it's linked to practical benefits, like low interest rates, making it easier to float stocks and bonds internationally.
So if gold offered all this, why fight it? That's the central question the book raises. Who are the antagonists in this war?
Okay, let's unpack that. Who does Lips say is fighting gold? First, nationalists. He argues they want to cut ties with the world market, be self-sufficient.
Then you have interventionist governments, pressure groups. They see gold as getting in the way of them managing prices or wages, manipulating the economy, basically.
And maybe the biggest opponents, according to Lips, the credit expansionists, people who want to print money. Gold puts a hard limit on that.
Yeah, the core claim is that gold takes away political control over the value of money. It busts the myth that governments can just print wealth.
And the source is blunt. The gold standard didn't just fail. Governments actively destroyed it.
Destroyed it, Lips argues, because they bought into this fallacy, this idea that just printing more money, expanding credit, automatically lowers interest rates and fixes trade problems.
He frames this whole fight against gold as part of a larger shift, away from free trade and peace.
Towards national self-sufficiency, protectionism, war, even totalitarianism. It's a very stark framing.
Wow. Okay, so that leads us to the big pivot away from gold. The start of the real gold wars, as the book sees it. World War I up to Bretton Woods.
World War I is positioned as a turning point. The gold standard had to go, the argument runs so governments could finance the war. Deficits, paper money.
The claim being the war couldn't have lasted nearly as long otherwise. Financially impossible.
That's the assertion. Then after the war, yeah, they talked about going back to gold, but what really happened was the gold exchange standard, Genoa 1922.
Which Lips calls a dangerous surrogate, because currencies like the dollar and the pound were treated as good as gold.
Right. Held as reserves by other central banks, but it wasn't a full return to gold backing for everyone.
Okay, fast forward to Bretton Woods, 1944. The source sees this not as learning lessons, but more like
An American dictate, basically, establishing the dollar's supremacy.
because under Bretton Woods, only the dollar was directly convertible to gold. Right, and only for foreign central banks, not individuals.
Exactly. Currencies pegged to the dollar or gold, fixed rates, the IMF set up to lend money for payment imbalances. Key figures were Harry Dexter White for the U.S., Keynes for the British.
But Lips points to what he calls a fatal flaw in this system.
Yes, the credit facilities, the IMF lending. He argues it basically neutered gold's traditional disciplinary role.
How so?
Well, it let key countries, especially the U.S., run deficits without facing the music immediately. They'd pay foreigners in dollars.
And those dollars would just get held as reserves or flow back into the U.S. system?
Pretty much. Effectively financing the deficit. Jacques Rueff, the French economist, was a huge critic. Called it absurd, dangerous, warned of a potential credit collapse.
And even within the system, people like John Exter were critical of the Fed, right? Saying they violated gold discipline early on.
Yeah, Exter argued the Fed started buying paper assets, not just gold, which let banks create more credit than gold reserves should have allowed. His quote is something like, "People don't like discipline. The Fed is no exception."
And all this, the easier credit, government spending, it started hitting the dollar's value. Inflation picked up.
Definitely. You see the CPI rising in the U.S., really taking off in the 60s, and eventually hitting, 15% in 1980?
The source is pretty scathing about the establishment here. Central bankers, banks, economists, repeating mistakes, no sense of history.
Leading towards tragedy is how it's put.
So the war heats up in the 60s and 70s. The gold pool that was a major front.
Right. Early 60s, central banks, U.S., U.K., Germany, France, others pool their gold reserves.
To keep the London gold price from going above $35.20 an ounce.
Exactly. They intervened in the market. And crucially, they had this secret agreement not to buy gold from outsiders, like Russia or South Africa.
The book quotes James Dines, using really strong language here. Economic imperialism, fascism.
Yeah, talking about things like restricting tourist spending, forcing U.S. companies to bring money home, calling them fascist acts that happen without much public pushback.
And Antal Fakit's idea of a demonetization racket.
Fakit argues governments always think they can just decree value. He points to the U.S. demonetizing silver in 1873, calls it the crime of 1873, and then Nixon effectively demonetizing gold internationally in 1971, the crime of 1971. All attempts, he says, to hide the dollar's falling value.
Meanwhile, France under de Gaulle goes on the offensive.
Big time. De Gaulle openly attacks the dollar's dominance, calls for a return to gold, and actually starts converting France's dollar holdings into physical gold. Billions worth.
And U.S. officials like Charles Coons blamed de Gaulle for speeding up the end of Bretton Woods.
They did. Rueff, the Bretton Woods critic, was advising de Gaulle, so that probably didn't help relations.
Then there's the whole narrative of a gold shortage. The book argues this was a myth.
Yeah, Lips argues it was either a misunderstanding or a deliberate story. Monetary crises were blamed on not having enough physical gold.
Which then justified creating SDR's special drawing rights.
Exactly. Paper gold, as it was called. Designed by people like Paul Volcker to supplement gold and dollars, based on this idea that there just wasn't enough real money. Lips says there was plenty of gold. SDRs were part of the move away from it.
The Wall Street Journal apparently welcomed SDRs as a win for the American school and a blow to gold fans.
Though, as the source notes, even SDRs had to be denominated in gold initially. It was still the yardstick. There's mention of pressure, too. Hints of trouble if countries didn't accept SDRs.
And all this time, interest rates are climbing, reflecting inflation, stock markets getting wild.
Very speculative. Like 1929, the book says, before big drops in 69 and then severe bear markets after 72, made worse by inflation. And anti-gold views were apparently very fashionable, especially in Keynesian circles.
Amidst this, Switzerland becomes the key hub for physical gold trading.
Absolutely. Secrecy, modern refineries, They handled Russian gold, and after the gold pool collapsed in '68, Zurich basically took over. Maybe 80% of the physical market.
Okay, so all these pressures are building. U.S. dollar liabilities to foreigners soaring, gold reserves shrinking.
Right, $60 billion in liabilities versus less than $10 billion in gold by '71. Rueff had apparently suggested doubling the gold price to fix things.
But Nixon went the other way. August 1971. Closed the gold window. Suspended dollar convertibility for foreign central banks.
A watershed moment, Lips calls it. Changed everything. And he finds it tragic that leaders today seem to have forgotten its significance.
And severing that link, the book argues, that's what unleashed the paper gold market. Derivatives, futures.
Exactly. Exploded in size. By 1999, the estimate cited is that the paper market was 90, maybe 100 times bigger than the actual physical gold market. Dines called it a Frankenstein monster.
The source even mentions warnings from people like Warren Buffett about the risks of these complex derivatives.
Yeah, adding risk and distortion that maybe wasn't fully understood.
So the Gold War didn't end there. It continues through the 80s, 90s, 2000s. Paul Volcker comes in at the Fed in '79.
And he takes drastic action, right? Jacking up interest rates to crush that high inflation.
He did bring it down significantly from double digits to maybe 3-4% by '87. More stable prices followed.
But the book draws parallels between the '80s and the '20s. Both had tax cuts, credit booms, debt-fueled spending, service sector jobs, a feeling of permanent prosperity.
But also key differences pointing to maybe more instability in the '80s.
Crucial differences, the source argues. U.S. was a creditor in the '20s, world's biggest debtor in the '80s. Budget surpluses then, massive deficits later. National debt slashed in the '20s, ballooned in the '80s. Trade surplus versus historic trade deficit.
The book also touches on how gold is viewed, jewelry versus investment. Cites Dr. Lawrence Parks arguing the gold is jewelry focus didn't actually help miners.
Yeah, he found fabricated jewelry went up, but gold price and miner profits went down after the World Gold Council started in '87, though he admits a lot of Asian jewelry demand is investment-driven.
And Lips keeps coming back to this idea of manipulation, governments needing to cap the gold price to maintain the funny money illusion.
Right, the idea that unbacked paper money holds value. And central banks, their role shifts. Theoretically, they protect the currency, but the book argues their real role became bailing out banks, lender of last resort.
Professor Rothbard decided, saying banks wanted a central bank not to stop inflation, but to enable it for bigger profits.
That's the argument presented, yes, beyond what free competition would allow.
Then the euro rise in '99. How's that viewed?
Critically, a synthetic, stateless paper currency lacks history, credibility. Its future seen as shaky unless the ECB anchors it somehow, perhaps with gold.
A big part of the later story revolves around Switzerland, the Swiss National Bank. Historically prudent, gold-backed franc.
Yeah, the francs had unique appeal after '71 because of that gold link, but a new generation took over at the SNB, the source claims. Different mindset.
Focused on exports, wanting a weaker franc.
Exactly, and selling gold was seen as a way to do it, weaken the franc, and push down the gold price at the same time.
Lips calls this the Gold War against Switzerland, an attack on freedom, essentially, arguing Switzerland's gold and banking secrecy were targets.
He cites Edgar Bromsman's total war comments regarding dormant accounts, suggesting it was part of the pressure. The eventual move to cut the gold reserve requirement and sell gold is portrayed as Switzerland giving in.
And these central bank gold sales and lending gold that's presented as a key weapon in this war.
Absolutely. Central banks held huge amounts, over 34,000 tons in '96. Just announcing sales, like Switzerland did, could crash the price. Billions in paper losses overnight.
And lending it out for tiny returns, like 1.5%.
Yeah, the gold carry trade, the book calls it. Risking the asset, the people's gold, while also helping to suppress its price. It sounds counterintuitive.
The manipulation argument really comes to the fore here. Central banks actively suppressing the price.
And Alan Greenspan's famous quote about central banks standing ready to lease more gold if the price rose.
Lips interprets that not as denying manipulation, but as basically inviting short sellers. Borrow gold, sell it, keep the price down. The biggest money swindle in history, as the source puts it.
The derivatives market is key to this alleged suppression. Paper gold futures. Huge leverage, influencing price without needing physical metal. New hedging tools created for this gold war.
And bullion banks, investment banks. They're named as the intermediaries.
Yes, profiting by connecting central banks leasing gold with borrowers like hedge funds or miners. Goldman Sachs, JP Morgan, Chase, Deutsche Bank, UBS, others are mentioned, making big money while central banks took the risk and losses.
What about the gold miners themselves? How did they fare?
Devastating consequences, according to the book. Suppressed price, plus aggressive hedging, which Lips argues was often speculation, citing Barrick specifically.
Accusing Barrick of misleading shareholders. Reporting hedge profits while the low gold price made mines unviable.
That's the claim, forcing mine closures. Ashanti and Cambior's hedging problems are also cited as miners ruined by these practices.
And this impacts poor countries too, right? Many rely on gold exports.
Heavily indebted poor countries, HIPCs. Over 30 are gold producers. The low price hurts jobs, taxes, development. Ghana's cited debt relief funded by gold sales that hurt Ghana's main export. It's presented as deeply ironic.
The book brings in John Exter's debt pyramid concept here.
Right. The financial system as an upside-down pyramid. Tiny base of real money, like gold, supporting this huge, unstable structure of paper claims. Hathaway applies it, saying the old gold-backed pyramid is gone, replaced by this complex web of paper claims against gold.
And there's a moral dimension argued too, fiat money leading to a decline in standards.
Yeah, the argument is that when money loses its anchor, society loses a standard for behavior, linked to increases in divorce, fraud, crime, tying the removal of gold backing from the dollar to a perceived moral decline.
So by the time the book's finalized, around 2001, 2002, gold is cheap, below production costs for many. Gold stocks are moribund.
Stagnant, dying off. But interestingly, the source also notes significant physical accumulation was happening, suggesting maybe a bottom was near, a potential opportunity.
Lips also makes sure to mention his influences and allies in this fight.
Right. His own background as a banker, meeting Colonel Harwood, who warned about Keynesianism, working with mining execs who saw gold as money, and Dr. Lawrence Parks, the editor, fighting for honest weights and measures.
James Dines gets quoted again, hitting hard at economists, weaned on Samuelson, and trained to worship Keynes.
Organizations, too. CMRE, publishing critiques of the IMF, AIR, founded by Harwood, providing support.
And GATA, the Gold Antitrust Action Committee, very active.
Yeah. Founded by Bill Murphy and Chris Powell, directly accusing banks like Goldman and Morgan of manipulation, linking gold lending to bailing out gamblers, trying to restore a free market for gold.
James Turk is also cited, arguing selling gold means losing independence.
Monetary sovereignty, yeah.
Okay, so after all that history and argument, how does this connect back to you, the listener? Why should you care about this gold war?
Well, the book argues it directly impacts the stability of the money you use every day, the real value of your savings. It shapes how governments and big financial players act.
It cites France Pick's unofficial stats suggesting the average American standard of living declined due to currency debasement, unless you were positioned to benefit or protect yourself.
And from an investment viewpoint, gold is presented as the ultimate anti-dollar asset, a way to potentially mitigate risks from things like huge trade deficits or financial crises predicted by some analysts. Western investors were apparently big buyers in the 70s gold rally.
And that idea about morality.
Yeah.
The source presents it as affecting society broadly, not just economically.
So wrapping it up, the core conflict in gold wars is really this. Gold's historical role as sound money, providing stability, versus these modern forces, governments, central banks, financial institutions allegedly working deliberately to suppress it.
Suppress its price, demonetize it,
Yeah.
all to keep a system running on fiat money and ever-increasing debt.
Yeah, that's the essential thesis. And understanding that perspective, agree with it or not, it really can change how you view currency values, inflation, government debt, the whole financial system's stability.
So the final provocative thought the book kind of leaves you with is this. If gold's role is being deliberately suppressed, as Lips contends, what does that imply about where our global monetary system is heading?
And maybe more personally, how does understanding this war over money itself change how you think about wealth and value in today's world?